1. Trump signs Genius Act, US dollar stablecoins get regulatory boost. Crypto news. 2. US House passes Genius Act, stablecoin bill set to be signed by Trump. 3. Trump signs Genius Act, US becomes crypto capital of the world. 1. Trump signs Genius Act, US dollar stablecoins get regulatory boost. Crypto news. The United States has just made a bold move that could change the way people use digital money, and not everyone is on board with this decision. President Donald Trump has signed into law a comprehensive framework for regulating stablecoins, a type of cryptocurrency specifically designed to maintain a stable value, usually by being pegged 1:1 to the US dollar. This groundbreaking policy, officially named the Genius Act, guiding and establishing national innovation for US stablecoins, not only signals a new era for digital finance but also further entrenches the US dollar's dominance in the global economy. This is where the debate really heats up. The Genius Act moved swiftly through both chambers of Congress, with the House voting 308 to 122 in favor after Senate approval. At a White House bill signing ceremony attended by government officials, lawmakers, and crypto industry leaders, Trump made a memorable remark: "They named the Genius Act after me. This is good for the dollar, good for the country. That's why I was on board early, and, of course, for their votes." His candid acknowledgement that political support played a role here is sure to get people talking. The law is a major win for the cryptocurrency sector, which has spent years lobbying for clearer rules to help digital currencies gain mainstream acceptance. By providing a regulatory structure, the Genius Act makes it easier for banks, retailers, and consumers to use stablecoins with greater confidence. The industry's enthusiasm is reflected in its significant political donations, over $245 million in the last election cycle to support candidates, including Trump, who back crypto-friendly policies. But here's what many people might miss: stablecoins aren't just another new digital asset. They are specifically designed to minimize price swings, making them attractive for payments and remittances. Under the Genius Act, stablecoins will be required to hold liquid assets as backing, typically US Treasury securities or cash equivalents. According to CoinGecko, the stablecoin market is already worth more than $260 billion, and Standard Chartered predicts it could balloon to $2 trillion by 2028 if adoption accelerates. Treasury Secretary Scott Bessent highlighted the global implications in a public statement. This innovation will strengthen the dollar's position as the world's reserve currency, give billions of people better access to the US dollar economy, and likely increase demand for US treasuries, which support these stable coins. But is this a genuine leap forward, or simply a way to prop up the US financial system at the expense of other nations? That's where opinions begin to diverge. Critics have not held back. Transparency International's Scott Graytak pointedly warned that Congress missed an opportunity to enforce robust anti-money laundering safeguards and restrict foreign stablecoin operators. By leaving known loopholes open and failing to protect America's digital financial infrastructure, Congress risks turning the US financial system into a playground for criminals and hostile foreign governments, he said. Others worry about handing even more power to a sector that's already amassing enormous influence. Should we be concerned about regulatory capture, or is this just the price of progress? Adding more fuel to the crypto fire, Trump also signed an executive order in March establishing a strategic Bitcoin reserve, a move that sparked debate about whether cryptocurrencies belong in the national treasury. It's worth noting that Trump is directly connected to the industry. He founded the meme coin Dollar Trump and maintains a stake in the crypto firm World Liberty Financial. Does this create a conflict of interest, or is it simply proof of his commitment to innovation? So, what are your thoughts? Is the Genius Act a visionary step toward a more inclusive, digital-first economy, or is it a regulatory patchwork that leaves critical issues unresolved? Does this law safeguard the dollar's future, or does it expose the financial system to new risks? Join the conversation below. Do you agree with the critics, or do you believe the US is finally getting crypto regulation right? 2. US House passes Genius Act, stablecoin bill set to be signed by Trump. Imagine a world where cryptocurrency is no longer a mysterious entity, but a regulated and trusted part of our financial system. This vision is now one step closer to reality, thanks to the U.S. House of Representatives' recent decision to pass their Genius Act, Stablecoin bill, which is set to be signed into law by President Donald Trump. But here's where it gets interesting. This move has sparked a mix of reactions from industry experts, ranging from enthusiasm to caution. On one hand, the bill's passage is seen as a major victory for the digital asset industry, which has been pushing for federal legislation for years. The Genius Act aims to create a regulatory framework for US dollar-pegged cryptocurrency tokens, known as stablecoins, and expand the Commodity Futures Trading Commission's oversight of the industry. And this is the part most people miss. The bill's impact on the industry could be huge, with some experts predicting a surge in adoption and investment. For instance, Steve Sosnick, chief strategist at Interactive Brokers, notes that the bill's passage was largely expected, but the fact that it didn't trigger a sell the news reaction suggests that traders remain hopeful about the legislation's potential impact. On the other hand, some experts are sounding a note of caution, warning that the correlation between crypto and the S&P 500 is high, and that buying crypto may not be the magic bullet that some investors think it is. Bill Strazulo, chief market strategist at Bell Curve Trading, points out that crypto's correlation with the S&P 500 is around 90%, which means that it may not provide the diversification that investors are looking for. But here's the thing, the Genius Act is not just about regulation, it's also about trust and transparency. By establishing clear rules for stablecoins and digital assets, the bill could unlock broader adoption by traditional institutions and bring much-needed trust to the sector. As Andrew Forson, president of DeFi Technologies, puts it, the bill signals the start of a new era for digital assets and public companies, and could pave the way for compliant, bank-backed digital money and new solutions for corporate treasuries. So, what does this mean for the future of cryptocurrency? Will the Genius Act be the catalyst that takes crypto to the next level, or will it simply provide a false sense of security? We'd love to hear your thoughts. Do you think the Genius Act is a positive step for the industry, or are there potential pitfalls that we should be aware of? The passage of the Genius Act has also sparked a reaction from industry leaders, with some hailing it as a defining moment for the future of money and the internet financial system. Dante Despart, chief strategy officer at Circle, commends congressional leaders for delivering a regulatory foundation that puts consumer protection, financial integrity, and U.S. competitiveness at the forefront. Summer Mersinger, CEO of the Blockchain Association, calls the bipartisan passage of the Genius Act a watershed moment for digital assets in the United States, and urges President Trump to swiftly sign the bill into law. As the industry continues to evolve, one thing is clear, the Genius Act is just the beginning. With the bill set to be signed into law, we can expect to see a surge in investment and adoption, as well as a renewed focus on regulation and transparency. But as we move forward, it's essential to consider the potential implications of this legislation and to ask the tough questions: what does this mean for the future of cryptocurrency, and how will it impact the broader financial system? We'd love to hear your thoughts and opinions on this topic, so please don't hesitate to share them in the comments below. 3. Trump signs Genius Act, US becomes crypto capital of the world. Imagine a future where the United States leads the world in cryptocurrency innovation. This vision took a significant step forward when President Donald Trump signed the Guiding and Establishing National Innovation for U.S. Stablecoins, Genius, Act into law. This groundbreaking legislation sets federal regulations for digital currencies, aiming to position the U.S. as the global crypto capital. But here's where it gets controversial: not everyone is on board with this bold move. Trump's journey to this moment began with a keynote address at a Bitcoin conference in Nashville, Tennessee, back in July 2024. There, he promised that his administration would craft regulations with a deep understanding and appreciation for the crypto industry. "I pledged that we would bring back American liberty and leadership and make the United States the crypto capital of the world," Trump reiterated during the signing ceremony. He emphasized that this is just the beginning, hinting at further advancements under his leadership. But what exactly are stablecoins, and why are they so important? Stablecoins are a type of digital currency that is pegged to a stable asset, such as gold or the US dollar. This linkage helps maintain a more consistent price, making them a reliable option for transactions and investments. The Genius Act aims to create a clear and straightforward regulatory framework for these dollar-backed stablecoins, potentially sparking a revolution in financial technology akin to the birth of the Internet. The Genius Act includes several key provisions. For instance, it requires monthly public disclosures of reserve competition and annual audited financial statements for issuers with a market capitalization exceeding $50 billion. These measures are designed to ensure transparency and accountability within the industry. The journey to this legislation was not without its hurdles. The House passed the Genius Act with a 308 to 122 vote, following its approval in the Senate with a 68 to 30 margin. Majority Whip Tom Emmer, Republican Minnesota, highlighted the need for clear rules and the end of what he called the Biden administration's anti-crypto crusade. However, the bill did not receive unanimous support from Trump's own party. 12 Republicans voted against it, citing concerns over potential conflicts of interest, particularly Trump's promotion of a digital currency called Dollar Trump. Representative Maxine Waters, Democrat California, was among the most vocal critics. She argued that the bill's passage would signal Congress's acceptance of corruption and foreign influence. By passing this bill, Congress will be telling the world that Congress is okay with corruption, okay with foreign companies buying influence, and okay with criminals buying Trump coins to seek pardons and beneficial treatment, Waters stated on the House floor. In addition to the Genius Act, the House passed two other cryptocurrency-related measures, the Digital Asset Market Clarity Act, and the Anti-CBDC Surveillance State Act. The Clarity Act aims to provide additional regulatory frameworks for digital assets, while the Anti-CBDC Surveillance State Act seeks to prevent the Federal Reserve from issuing central bank digital currency, CBDC, directly to individuals, thereby protecting their privacy. And this is the part most people miss: the debate around cryptocurrency regulation is far from over. As the US takes steps to become the global leader in crypto, differing opinions and concerns will continue to shape the conversation. So, what do you think? Is the Genius Act a step in the right direction, or does it open the door to potential conflicts of interest? Share your thoughts in the comments and let the discussion begin.